Okay, welcome guys. Welcome to Trade Floor Talk. In this webinar, we will be covering a preview to the ECB rate decision. So my name is Gavin Pannu, and I'm going to be sort of covering one particular theme today. But before we go into that, we do have some time before the announcement. The announcement's taking place at 12:45. I'd like to cover sort of a overview of what's taking place in the markets. We are going live. We're going live on YouTube, but we also have our private go-to-meeting session taking place. So in our private session, please feel free to ask questions. I do have the chat box open, so please feel free to ask questions. Make this an interactive session. But let's begin. Okay, so let's just go through the economic calendar. Now, most of you should be using this economic calendar on an ongoing basis. This gives us an indication of what news is up and coming. Okay, so any data, generally macro data being released, will be on this economic calendar. This is an economic calendar. There is another calendar which is microeconomic calendar, which will give you the earnings reports and numbers for individual companies. And as we are in the earnings season, that's something that you should also gauge and view. Okay, so just looking through what's taken place so far, please remember that this is sort of going to be covering the upcoming event, but what's happened so far. So looking at the sort of overnight session, guys, sort of to highlight some of the key points there is that retail sales had fallen in China around 1.8% for the month of June. That's dropping for the 5th month in a row, and naturally that's going to have an impact in the very short term because that's seen as a leading indicator. Okay, so if we see retail sales falling, that's going to have a knock-on impact on the other sort of lagging indicators such as the GDP figure. We'll cover the GDP figure also because the GDP figure is an important one, especially that in China we've seen that the GDP wasn't as bad as previously expected. Okay, so the GDP was better than previously announced. Okay, so the Chinese economy grew by 3.2% in the previous sort of 3 months to June. From a year earlier. Okay, so that's a year-on-year sort of data. So it's beaten the sort of forecast, which is set at 2.4% expansion. We do have more squawk going off in the background as well, so that's going to keep me up to date on financial markets. So let me make sure that's also muted.
There is a text to be released.
Give me a second. Okay, so I've got that there. Okay, great. So let me just move that up all the way. Okay, let's continue, guys, with the rest of this presentation. So as I mentioned, even though that retail sales had fallen, but overall we've seen that the Chinese economy had grew. But remember, the GDP data is a lagging indicator. Okay, it's looking at sort of the 3 months prior. Or to June, 3 months to June, in comparison to the previous year, whereas the retail sales number is for each month. Okay, so that's seen as more of a leading indicator. Even with a positive outcome in the GDP, the retail sales had fallen, which led to a bit more selling pressure coming through. Okay, and we did see Asian markets fall, but for the week itself, it's still above. It's still in a positive territory. Okay. Another sort of theme that's come through in this week's worth of trading has been the hopes of a vaccine. Okay. So now we're going to talk about the coronavirus. Let's bring up sort of some data there. I might need to sort of refresh this. Let's just give this a second to load. To have quite a few applications open at the same time, so apologies for the lag there. So we're going to look at sort of the latest coronavirus update. Okay, so total confirmed cases 13.5 million or just above. We've seen US still maintain the most amount of cases. In fact, the new epicenter for coronavirus in the US is now Florida. We've seen Brazil numbers almost reaching 2 million, India numbers almost at 1 million. Then we've seen Russia, Peru, Chile, Mexico. So, a lot of impact to South America. South Africa numbers are growing greater than United Kingdom. So we've seen a substantial fall, but the rate of growth is still there, guys. The rate of growth is still there. Global deaths had crossed 500,000. In fact, it's coming quite close to the 600,000 figure. Okay, so you've got to be cautious in regards to what's taking place with coronavirus, but the market is quick at discounting new information. Okay, so the market is very quick at discounting new information. Remember those keywords. Okay, the reason why is that we knew about coronavirus since the start of this year. It migrated over to sort of more of the Western society since March and April period, but it's now become less of a concern because that information is already being discounted because that's already expected. But what's not being discounted is the hopes of vaccine. Okay, so vaccine and the hopes of this vaccine is super crucial. Okay, whoever comes, when we come closer to sort of the hopes of a vaccine, that's going to straight away impact the risk sentiment or the risk appetite of individuals. People will be willing to take more risk if we establish a vaccine. Okay, and that's why we've seen in the recent days a strong few US sessions taking place. Okay, now, as we notice sort of the key points from here, there's another website that I tend to look at that gauges coronavirus but monitors the impact from its announcements, okay, the news announcements from coronavirus, okay. And this is such a great website actually, because when you're seeing that related topics and one-day change trending, this leads you to, it gives you sort of early indication to it's a leading indicator. It's an early indication of what to expect from a risk sentiment. Okay, so we've seen that the number one topic. Let's make sure that's correct. Yes, the number one topic there is the hopes of a vaccine. Okay, so if you look at the ratios, over 11%. The one-day change is 2.53%. So the hopes of vaccine has been growing, and therefore the risk sentiment is going to be a little bit more positive. Okay, so this is a good website to have a look at. It's giving you total cases numbers. The numbers seem a little bit off compared to this one here, but that's not what I'm looking for. I'm looking at sort of the panic index, okay, whether it's positive or negative. You're looking at sort of the media hype involved, fake news index, worldwide sentiment index. So there's quite a bit of information here, right? You can also see the most trending topics. And based on that, it can give you guidance. It can give you guidance. Okay, so we've seen vaccine, face masks. Now you're seeing remote working on the increase, hospital beds, and so on. Okay, but also if we have a look at treatments. Okay, so what is being searched the most? Okay, so we can see sort of hydrochloroquine being the most searched. Let's just double check. Yes, you can. Okay, and there are additional sort of treatments that are out there that are also trending. So this gives you an early indication of what to expect from the sentiment side of the coronavirus. Now, I think this website for a trader has more of an impact than looking at the overall stats, because remember, now what drives market prices higher or lower? Is it the actual data being released, or the perception of that data? It's always the perception. It's always the how market participants view that data and adjust their portfolio or place their trades based around that new information. So yeah. So remember, the opinions matter just as much as the actual factual information. Yeah. So in discussing sort of the hopes of vaccine, which has come to the forefront in regards to the whole coronavirus theme, we're seeing more of a positive sentiment taking place. Okay, now there are a few issues. So if we come back to sort of the economic calendar, and something that we're going to sort of look into is in the UK. Early this morning we had our claimant count change. We're seeing sort of average earnings and unemployment rate as well. Okay, So, the unemployment rate wasn't so bad. So the UK employment data this morning had shown that the unemployment rate held around 3.9% for the month of June. Right now, if you compare that to the forecast was a greater number. So therefore, that's actually a better number than expected, and it's in line with the previous. Okay, so just looking at the graph itself, that's what we're seeing. So pretty steady, not bad, right? But that does not include the furlough system, the recent furlough system that's in place right now. So it's not a true representation, and we could assume there are, the numbers could be much, much higher, which we'll be finding out in the upcoming months. Okay, I think ONS, when they do their survey, the loss of what they expected was 649,000 jobs have sort of been lost since between March and June, and they're expecting more. They are expecting more job losses. Okay, so yeah, just be cautious to that. Some data will have less of an impact because it's not a true representation, right? Okay, so let me have a quick look if there is any chat. Please, guys, do feel free to ask questions. Feel free to ask questions as we proceed, right? Okay, moving on. So something to sort of also mention is that we've something that, okay, I'll touch on this first. So the IMF chief has stated and warned sort of about the global economy. Okay, so we're not out of the woods, right? These guys take sort of a longer term perspective. Okay, so they give us sort of the forecast for this year, next year, and the year after. So it gives sort of a 3-year, 5-year guidance of how they're seeing the economy proceed. So just be cautious to sort of the IMF ongoing updates. Is something that you should be keeping up to date with. So the IMF last month further slashed its 2020 global output forecast, predicting a 4.9% contraction. Okay, and weaker than expected recovery in 2021. Right, so they provide a forecast for the upcoming year, 2 years, or 3 years, whichever one has more you're gauging. And yeah, it's not so great. They've said that $11 trillion in fiscal measures by G20 members and other countries have taken place, as well as sort of massive central banks' liquidity injections. It's put a floor under the global economy so far, but time will tell how bad sort of it will get. Okay, so even so, dangers lurked. She said, including a major new wave of infections, stretched asset valuations, volatile commodity prices, rising protectionism, and political instability. Don't forget, we've got the US elections upcoming in a couple of months. Okay, that's not so far from now. And it's not looking so great for Trump at the moment. I think he's sacked his his party manager. Okay, so another sort of breaking news that came through was in regards to a Twitter hack. Okay, a Twitter hack taking place where there was individuals such as the CEO of Apple, Elon Musk, Bill Gates, I think it was Barack Obama. Sort of a number of individuals' accounts being hacked. So we did see a knock-on impact to the share price of Twitter. Those are sort of the key points to mention. Something to sort of follow up with is, as we are in the earnings season at the moment, something that you need to be considering is naturally individual corporations and their forecasted and expected earnings. We'll see numbers being released from Microsoft, Bank of America, Johnson & Johnson, and what I'm looking forward to is Netflix. Okay, so please do sort of develop a more all-rounded sort of knowledge in regards to financial markets by looking at some stocks and equity markets to give you an understanding of sort of what's the driving factors there as well. Yeah, just have a quick look. Okay, so yeah, let's continue. Okay, So coming back to sort of the ECB event ahead, okay, so the data is going to be released at 12:45 p.m. Okay, so we have an actual rate decision being released at 12:45, but at the same time, you can review the statement. Okay, the statement is going to be released. It's generally sort of released on the European Central Bank website. You can click on the latest release here, so it's something that you should. Just wait for that announcement to take place. Okay, so it's going to be released sometime soon. Let's come back to that. Right, and it's a great read. It's a great read. Okay, so it's a read that you must do, what you're looking for is the tone. You're looking at the tonality of that statement. Okay, whether it's a hawkish or dovish statements being a statement overall. Now, what is hawkish? What is hawkish? Hawkish can be considered if there is an aggressive stance or a strong stance, shall I say, in regards to what's going to be taking place. Right? It's like saying that we may not sort of change the interest rates, but we will do more quantitative easing. Yeah, we're going to be doing more quantitative easing, or we may change the interest rates at the next meeting, right? So that's taking more. That's a hawkish stance. That's taking more of a strong stance on what they want to set out going forward. A dovish tone is and that's why you should never relate hawkish and dovish to whether it's a positive or negative result. Okay, positive being like a raise in the interest rates, or negative being a cut to the interest rates. Okay, it's totally different, right? It's based on the tonality, the stance that they're taking. Okay, so hawkish is a strong stance, but a weak stance is seen as a dovish statement, and that means that they're going to be continuing to review ongoing indicators to determine whether there should be any adjustments. That's more of a dovish statement. Okay, so that's the information you're looking for from the statement. It is expected to be a non-event, unfortunately. So we're not expecting large movements to take place. There is a very unlikely probability that they're going to raise rates or cut rates. Okay, so there's going to be no change. As you can see, it's not changed since most of sort of April 2016. Okay, so March, April 2016, it's been kept flat. Okay, kept at sort of 0%. Right, so it's not the interest rate that's the deciding factor for the ECB, the European Central Bank. It's more about the quantitative easing program that they're doing at the moment. Now, be aware that 45 minutes from 12:45 is the actual press conference. Okay, this is where Christine Lagarde will be sitting in front of a load of financial journalists. There's going to be a pool of financial journalists sitting there, and there's two parts to this. Okay, there's two parts to this conference. Now, the first part of this conference is actually reading the statement. Right, so the statement, sort of the monetary policy statement, is just reiterating. Maybe they might, diverge slightly, so digress slightly from the statement, but generally they're sort of, going through the statement itself. That's the first part. That's not where you expect the biggest movement, because most traders, most analysts out there will already have read the statement. Right, unless Christine Lagarde goes out and sets aside and completely digresses from the statement and says something completely not expected, then you could see market movement, but that's very unlikely. Okay, and the second part to the ECB press conference is the actual Q&A session. Okay, this Q&A session is with your financial journalists that are sitting there waiting to really push those buttons, to really sort of press certain themes. So it's during those questioning that we could see a movement taking place, a large movement taking place. Okay, so I would encourage you all to most definitely listen through the ECB press statement. It's an important one, guys. It is an important one. Now, as I mentioned, okay, so the European Central Bank is expected to keep their monetary policy on hold, okay, today, right? Policy, the stance we're expecting them to take now is a dovish stance. Okay, we expect them to say, we're going to wait and see what approach to take, and we'll try to assess the effectiveness of the crisis fighting measures which have already been implemented. Okay, now, there has been a string of better than expected economic data across the region, right? Following those record slumps due to the coronavirus induced restrictions. Yeah. But we're overall seeing that in the sort of EU bloc itself, right? A contraction. Yeah. So there is fear, and we're expecting to see some contraction. Now, at the same time, you've got to also consider that the ECB inaction would keep up pressure on EU leaders to agree on a common recovery fund later this week, which is for me a deciding factor, right? So we're expecting, when each of these members and leaders sit together, EU leaders sit together, and they come up to an actual package that they're all willing to sort of accept. That's key. Okay, so there's been sort of negotiations taking place in regards to that. So be careful to sort of keep an eye out to that. Last month the ECB expanded its pandemic emergency purchase program by 600 billion euros. Okay, so that's to a total. I think the total is in the region around 1.35 trillion euros. Okay, and we are expecting more. There could be a further increase to this. The question is how much of an increase. Okay, so that's what we're expecting in regards to the ECB press conference. Now, moving on from this, guys, you have your economic data and the economic calendar ahead of you. You already know the interest rates is unlikely to change. It's more about the policy statement and whether they take a wait and see stance or they come out with a very aggressive QE program that helps maybe the EU leaders to come up with a total recovery fund agreement. Okay. Now, moving on to sort of the asset itself. On a daily basis, there's about $6.6 trillion traded. Okay, 53% of that volume is in the euro dollar. Now, euro dollar has a substantial amount of volume, and we could see large movements taking place if we see them step away from the actual statement and say something that's not expected. But generally, we're not expecting too much of a movement taking place. Now, sort of key areas to stress for you as traders out there, guys. Now, prices holding the 114 handle. I pay a lot of attention to round numbers. Okay, prices holding around the 114 handle, but also it's not just holding the 114 handle. Let me just bring up a pen, something to sort of mention, guys. If there are any assets that you would like me to cover, please do mention it. Please do mention sort of any other assets. Now, something to sort of stress that price may be sort of holding the 114 handle, but it's also shown respect to that in the past. Okay, so we've seen price reaching summer period, so June of 2019, hitting that as the resistance. Okay, so that's the high in that region. Then, since then, it sort of sold off. Coming into 2020, most recently had risen again, had surpassed through the 114 handle, testing almost 115. Okay, so 115 being tested there. The most recently testing the 114 again, and it's surpassed through as where price is currently. Okay, so this zone here, you can almost create this as a zone. It's quite a large zone. If you're sort of a swing trader, you would not be looking to trade between the zone, between sort of the 114 to 115 handle. You're looking to see, we're going to see a much larger downward movement, or a much larger sort of bullish movement taking place in the longer term. So the longer term sort of macros being there. But if you're a day trader, it's a great opportunity to sort of trade between sort of the two key round numbers there. Yep. Now let me just quickly highlight both those numbers. Okay, so being sort of the 115 handle, looking at sort of what coincides with that. So we've seen price retesting that zone over there and there as well. Okay, so just looking at sort of the bigger picture, you can see sort of overall a downward trend. This downward trend surpassed all the way down to almost 106.37 handle, 106.37 or 35 handle. Since then, we've seen prices around the 114 handle now. Okay, something to sort of highlight also is the most recent low, which will be sort of in this region here, which coincides with a couple of turning points prior to that as well. So somewhere in this region here, resistance, 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 slight breakthrough, failed to break through, failed to continue the momentum, back below the resistance, retest of the resistance and a continuation, almost a head and shoulders pattern there, but doesn't really have much of a prior trend. Okay, but yeah, so we're looking at sort of these will be the key levels that I would suggest that you do apply to your charts, in addition to sort of some of the other types of analysis that you will be applying. Okay, so moving down to a lower time frame, going on to sort of the 1 hour time frame. We've highlighted sort of the key levels where price is at the moment, and then you can start to outline any indicators that you want to apply. Okay, so if we're looking at indicators, one of the sort of pivot points is something that I would be looking to apply now. Okay, so looking at key levels of pivots. Now, the PP level is the high-low close average from yesterday. Okay, so that's the PP level, which is in this region here, just around the 113 handle. Okay. In addition to that, we have 3, or you can have in some cases 4 resistance R1, R2, R3 levels, and below that you have your support levels. Okay, so S1, S2, S3, 4 and 5 there as well. Generally, most traders look at 1, 2, and 3, and 1, 2, just the 1, 2, 3 levels. Okay, now what I'm often looking for is the direction. Okay, it's showing me that from yesterday's average price, yeah, we're trading above that level. Okay, so in the very short term, there's a bullish momentum, right? So you're either looking for that continuation, or you're looking at when it reaches one of the key levels of resistance, R2 or R3, that could be an opportunity to short the asset and look for not a reversal. Don't always look for the reversal. Look for potentially a pullback or correction. Okay, so it might just pull back, correct. It's not always going to just fully reverse to back where it started. Okay, so yep, so that's sort of applying that. Let's also apply a moving average. Let's apply an exponential. Maybe I need to just put in moving average, exponential settings. Let's change that to a 20 period. Okay, so now looking at sort of a simple system such as this, right, what we're looking at is key levels of support and resistance identified on the major time frame. I'm now moving down to a much lower time frame. This could be potentially see my base time frame. So this is where I applied pivot points to give me an indication of what the overall direction is in the very short term. So as I sort of, I'm doing a top-down approach. I'm looking at sort of the major time frame, giving me the larger picture, then dropping it down to sort of a smaller time frame to give me the sentiment on this time frame. And then as I progress, I'll sort of, start to outline what could be the potential opportunities. Now, progressing on, we could be looking for so I've applied a 20 period moving average. So what does the moving average tell me? Okay, it's looking at the last 20 candles in this case. Okay, so in this, as we're on the 1 hour time frame, it's looking at the last 20 hours and comparing the most recent candle. It is giving slightly more weight to the most recent prices. It's an exponential moving average, not the simple moving average, okay, which maintains an equal weight. So it gives a bit more weight to the most recent prices, which allows you to have not just the simple moving average seen as a lagging indicator, the exponential, because of the allocating more weight to the most recent prices, can turn into more of a coincident to leading indicator. Okay, so it gives you potentially an early entry point. So we can see sort of the drive initially, and not a lot of respect being shown. If I now start to zoom in, okay, so not a lot of respect shown initially. Sort of we've seen price staying mostly above the 20 period exponential moving average, but most recently it's failed to sort of maintain and stay above it. We've seen sort of a breakthrough, it's almost a retest just above, and then a break lower. You can see this retest here, and it's at a key pivotal point overhead. Are we looking for the break above, or are we going to see this as another rejection point for the next potential short? Okay, remember that we've highlighted this key level from the higher time frame. Feel free to sort of ask questions, as it is unlikely that there will be any significant changes either on rates, quantitative easing, or will the tone of this release have increased significance? Absolutely, absolutely. As a trader, what else are you looking for? Okay, it's pretty much a non-event. We're not expecting too much change in regards to, no change to interest rates. Very little. We already have an idea of what they could be doing in the QE or the PEPP. So it's more about the tonality. Okay, it's more about how they come across, especially Christine Lagarde. Okay, so she's only been instated as the head of the ECB since the beginning of this year, and initially in the first few statements, she actually came across quite nervous in those press conferences. In fact, she had, she gave it a little bit of a mixed message to the other EU leaders, within the in the bloc. Okay, so she has been known to give misinformation in some of the previous press conferences. So it'll be great to sort of watch and understand how she comes across in this statement. Do note that when Jerome Powell was instated from Janet Yellen, that was I think it was last year, beginning of last year, Jan. Maybe it's a little bit longer ago. But yeah, even his few press conferences didn't go so well, right? So generally, it's a nervous period, especially when you're just starting this new role, which Christine Lagarde has only been sort of doing for the half of this year. Okay, her tonality sort of would have more significance, especially as she's sort of new to this, and that's where the stress is going to be. Okay. Now, coming back to looking at the euro dollar, I do need to make sure keep the squawk up as well. So we've got about 10 minutes to go. In regards to the ECB actual rate decision coming through. So now an important sort of consideration to make. So we've assessed this over here. Let's just assume that the actual data is going to be released, let's say just here, right? Let's just assume just here, right? The data is going to be released here, right? The interest rate decision. And now, something that I always like to stress, right, is that, the difference between a gambler and a trader, or a retail trader and a professional trader, is a retail trader sometimes, or a gambler sometimes, or in most cases, will actually, at this moment in time, will start to sort of place a trade in this region here. They'll start to place a trade just before the news announcement. Okay, just before the news announcement, they'll look to place a trade over here. For me, that's a deadly sin. Okay, that is something that you should not be looking to do. You don't want to take a trade just prior to the trade announcement, to the macro announcement. Never take a trade just before the announcement. That's you're pretty much hoping and hitting that it goes in your favor. Okay, there's very little, even though you've done prior analysis, but that the fundamental data being released is going to surpass the effect that your technicals at this time could do. Right, you need to know what the actual data is. So therefore, I would definitely recommend that traders not gamble, in this region here. Do not gamble in this region and place a trade and expect and hope that it goes in your favor. Be a little bit methodical. Yeah, be a little bit methodical. And I wouldn't suggest taking a trade bang on the sort of the announcement either. That's something that I would not recommend. Okay, the reason why is that's where you often see how you see sort of price movings as they are with these types of candles. You can see much larger candles, something like this taking place, which is showing a little whipsaw. Okay, but also not only that, remember that brokers add spread, they add commission in the form of spread to your trades as well, and therefore you assume that, okay, assuming this is where the candle sort of closes, you're looking to sort of enter there, you might get filled somewhere there because the spread had widened. Okay, the spread had widened. So spreads do widen by brokers around high impact events. Okay, so that's another sort of reason not to just take exactly at that news announcement. What I would recommend is just be patient. be patient, read sort of, what takes place, and then wait some time after this. Now, for sort of some day traders, scalpers, they might wait. I know someone that always waited 3 minutes after the news announcement. He waited for the initial whipsaw to sort of, take place, and then he entered. If he had a sort of a view, he would enter 3 minutes after the announcement. Okay. Now, I'm not saying that's a rule that you should take personally. I'm just giving you an example. You need to determine by basing it on statistical evidence by looking at a backtest. Do a backtest on previous announcement that has taken place, right? And that's when you want to sort of look to enter the market. In some cases, we have, so the key point being is that I would want you to look to sort of trade a minute, 2 minutes, 10 minutes, sometime after the initial whipsaw. So you don't want to trade. Actually, let me just remove that arrow as well. So what we want to do is want to trade somewhere sort of from this point onwards. Okay, we want to trade from this point onwards. We don't want to trade around the news announcement just when it's released due to the whipsaw. Okay, so I'll just put a W there, whipsaw there. We don't want to trade just before the announcement in this region over here, because that's just gambling. That's just hoping it goes in your favor. Very little sort of fundamental technical perspective to consider. So that's just gamble. But if you're a sort of long-term trader and you got in a few days ago based on your view, right, somewhere there, or a week ago, right, that's fine, right? So long-term traders would often do that, right? So they'll have a view that they're expecting for the next, recent macro data linking to the interest rates has been positive, as I mentioned earlier, right? We've seen in the Euro block actually the data hasn't been as bad as previously expected. Right, that doesn't necessarily mean that they're going to make a change, but that could be sort of a long-term view to take. That data's not been as bad, so therefore they'll do less. They would, do less of a quantitative easing, which will be positive for asset price, for example. Right. So as a long-term trader, you could look to sort of enter a few days earlier, a few weeks earlier, whatever it might be, or enter as a short-term trader in this region here, right? Or as a long-term trader or position trader, shall I say, somewhere in this region here thereafter, right? Expecting a continuation of this move here. You'll see, actually, if I just remove that again, this is what you should, seeing. If we was on a much lower time frame, guys, we are on a 1 hour time frame, but if you was on a much lower time frame, you could be seeing a bit more whipsaw. So, gamblers sort of getting in here. Just before the data's released, you see a bit of whipsaw, such as this, and then all of a sudden we start to see sort of, a direction taking place, right? So that's what you're expecting. Okay, so don't trade during these sort of two parts over here. Look thereafter as a short-term, long-term, or if you're sort of a position trader, you could have a view a few days earlier prior to that announcement. Yep. So hopefully that makes sense to you guys. Feel free to ask questions. Please do ask questions. The more questions, the more sort of I can cater this live session to you. Okay. So let's now look at sort of the charts. What I want to do is just put the volume up in regards to the squawk. Can you guys hear my squawk? Can you confirm that you can hear the squawk, or is it just coming through my headphones? Just give me a confirmation, guys. Okay. Okay, so 3 minutes to go, guys. It's very unlikely they'll change the interest rates. Okay, so what I'm going to do is going to drop down to a lower time frame. Okay, so when you're looking at the much lower time frame, guys, the candlestick analysis is super crucial. Yeah, assume that you've done the bulk of your analysis now, right? So you've done the sort of longer term, medium term picture. You're now on the shorter time frame, and you're starting to just look for where the trading opportunities could be. Now, please do remember that as a trader, your goal is to forecast future, market direction, right? You're forecasting market direction, but I think it's also important as a trader not to be biased to one view. Okay, you've got to be open and nimble to be able to take, a different position. If price changes, right, in accordingly. Okay, so it's important to remember that. Yeah, so don't just look for one trading opportunity. And I often say to individuals, if you're looking at price and you're looking at a trading opportunity, don't just come up with one opportunity. See if there's more, right? So we can see, we've got the 114.08 handle here. We can see a rejection candle being formed over here. Wait for that to close. A strong bearish candle. Moving average crossover. So we see something like this. We see the moving average going like that. That could be sort of an entry point going short. Okay, with a stop loss above the most recent resistance. Looking to take T1 over here, T2 over here. So that's sort of your short-term sort of short trade, shall I say. Another option is the opposite, right? So we're sort of also looking at where price breaks through this hand over here. But I wouldn't be looking to sort of trade up to this region here. That's not great on reward to risk ratio, so 1 minute to go, guys. So we could be looking for a break above this resistance zone. So I'm looking at breakthrough 114.20 handle, look to sort of target back up to 114.45 50 handle in that region over here as the next potential target. But obviously we need to sort of maintain a good reward to risk through our trades. So as I mentioned, sort of we're not expecting a huge move to take place because it should be in line with what's expected. Okay, just waiting for the announcement to take place. Should be coming out shortly. If you don't have Squawk service, you can use Forex Factory, guys, the website. There's quite a few economic calendars that you can use that will give you live updates to the second or with a few second delay. We're already seeing a bit of a bearish move taking place. 10 seconds, guys. Bearish move starting to already take place. Yep, so we're seeing, okay, resistance. Okay, just waiting. Still waiting, bit of a delay. Yep, bit of a delay already. Yep, so this is what I meant by the initial whipsaw. If I actually take it down to sort of the 1 minute time frame. Okay, unchanged, guys. Yep, so look at this on the 1 minute time frame. It's gone up to sort of that resistance we highlighted. Okay, so you've seen sort of how price is now sort of hovering. Okay, so the ECB has affirmed their size of pandemic purchase program at 1.35 trillion euros. Okay, so yeah, I mean, we saw that initial selling pressure coming through, but so far the rhetoric's coming through positive. So what the Squawk service does, right? They're going through this statement right now, as we sort of talk, where they're going through the rate statement, and they're picking out all the key points. And based on those key points, they're announcing it to all institutional banks who are now taking the positions based on this information. Okay, so we're breaking through the high, we're breaking through that most recent resistance. Right, it's been 2 minutes so far. It's been 2 minutes so far. This might be another sort of opportunity to. This will be the time now. You might start to think, okay, now that initial sort of whipsaw has taken place, this might lead to a trading opportunity now. Okay, so he's breaking down the statement further. Okay, so price is at a key pivotal point now, guys. This is the key here. What you don't want to do is pull the trigger too early. Patience is key. Patience is key, right? We haven't quite broke that resistance yet. well, we have broke through the resistance, but we haven't broke the most recent high. Okay, so we haven't broke through that recent high. So you could be looking for a close through this over here. You can see how it, surpassed through the resistance, a slight pullback, already starting to reject this low over here. We're seeing a bit more bullish sentiment coming through. It's holding still at the moment, so we're waiting for more information to step in and try to sort of coincide with both the fundamentals and technicals. So from the fundamental side of things, the rhetoric that's coming through is actually quite a positive for the economy. Okay, it's quite positive for the overall economy, right? But in addition to that, we're also now seeing the technicals go in line with the fundamentals, right? So straight away we saw reversal, holding still. We're now just waiting for the break above, and that could lead to that potential opportunity. Yeah. If I just quickly go over to sort of the press conference. And there we are. So here is the monetary policy decision. So you can sort of go into its statement, similar to what they were doing. What is this? Understand? Okay, cool. Similar to what the Squawk announcer was stating. He's stating all this information from this statement over here. Not a long read, guys. It's not a sort of a significant read, guys. It's a short statement that you could read within 2 to 3 minutes, right? 2 to 3 minutes you should be able to read this, and then you can sort of highlight what you think is the most pivotal points in there, and then you can come back to the markets and you can start to look to take a trade, right? We're already seeing the break above now. We're seeing a bullish sentiment coming through now. Okay, so so that covers that, guys. That covers that. Any questions, guys, before we end this session? So a recap coming through by the Squawk. Okay, so that's the highlights from this ECB event, guys. Thank you for attending this live sort of session, and hope to do more of these sessions as we progress through your program. And yeah, I'll speak to you guys soon. Okay, take care. Bye-bye.
This conference is no longer being recorded.